Greetings, everybody. This is Jeff Scott. This is live from Hanoi. I decided I'd do a video this weekend because I think the market's at a crossroads. It is here. It's March 10th. I think where you are, it just turned March 10th as well. We're 12 hours difference until you get daylight savings time tomorrow. When will be either 11 or 13? We haven't figured that out yet. This is for education purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I paid for my tools. Trading involves risk. You and you alone are solely responsible for any decisions you make. I'm not going to spend much time here except to say I started with Cancelin. It was improved by Morales and Catcher, Woodward and Brown. And then I really learned how to trade by following John Person, reading his books, attending his seminars, and buying his indicators. I have a lot of different programs. If I was on a desert isle, I would need TradeStation, Thinkorswim, Hgsi, and EdgeRater. And as I've talked about in recent videos, how much I've been using the SuperiorProfit.co tools from my friend Cigar, which I find to be helpful as well. For Hgsi, if you're new to it, it's a free 30-day trial, no credit card required. And the most important thing to me here is under investing strategies, you'll see hundreds of videos by me, Ron Brown, and others. So I always start by wondering where we are in this market, and clearly I'm feeling like we're in that circle, and that what has been a rapid run-up is either going to be a pause to refresh and go higher, or we about to take a leg lower. If I base it on 1 week's worth of information, I think that leg is lower, but I do keep in mind, and I would also, you have to make your own decision. We may not have entered that sell signal yet. We're just on the verge. So I have raised cash, smaller positions. I've started selling premium out of the money, and I will start to look aggressively at bear call spreads, buying puts, selling calls, shorting stock, and most importantly, contra ETFs if this continues the way it looks like it's going. Just a few pictures from Vietnam. My wife and I traded in our cars for, I guess they call these cyclones or cycles. So I feel bad for the poor guy on the left that had to push me all over Vietnam the other morning. And this is just an idea of rush hour in Vietnam where you have more scooters than you have cars. It's kind of scary, to be honest. Ho Chi Minh Mausoleum, we went and spent some time over at some of the sites. Here is his home that he lived in prior to his death. It's very nice. He had a sort of a lounging and outside area underneath. He had, adjacent to this, was a bomb shelter. We went to Ha Long Bay, I guess it's called, and spent the night on a, quote, cruise ship. And this is just a beautiful view of the rocks, the limestone rocks, islands that are throughout. Unfortunately, it was a cloudy day. This was one of the rare pictures that you actually saw color. And interestingly, this is still a color picture, but because of the cloud and the fog, I think it's actually kind of cool. Just another view of what we saw. So let's speak of the market. The end of the week, Friday was an interesting day in that there was clearly a late day reversal. Now I'm sitting here 12 hours away. I stayed up, market open, and I wanted to sell my, I had some VXX related ETFs, some of the 2Xs and the 3Xs, and they were very profitable with the market pulling back, and they were expiring. So I wanted to close them out. So I stayed up, I closed them out, went to sleep. My account was down a lot, and I woke up, I was actually made money on the day. Most of my gains were taking the gains out of those volatility plays early on, and then Amazon recovered throughout the day. You can see on Friday, energy was the weakest, utilities were the strongest, but a much better end than it began. The major markets you can see on the daily ETFs, here's the E-minis, daily futures, the NASDAQ futures, the Dow futures, the IWM, the VIX, and the dollar, that we've pulled back into the support area, although we did undercut significantly on the IWM and pretty much on the NASDAQ as well, the 200-day moving average. This is a place that if you're bullish, you better see a bounce soon. If you're bearish, this is through sharpening your pencil and thinking of what you're going to short. We did see a spike up this week in the VIX, but it came down on Friday. And the dollar had a nice move up early in the week and then weakened on Friday as well. On the weekly charts, you can clearly see a reversal in play on the major indexes, a bounce on the VIX, and the dollar really struggling to figure out where it's going along its 200-day ascending moving average. Now, background for this week, rates eased on both the 10-year and the 30-year. AD lines turned and fell on both the large and the small stocks. If you look at the, did I put the wrong one in? I put the wrong one in. If you look at the the AD line, the NYSE, it's clearly turned lower. It's taken the bullish ETFs with it. And with the fall in interest rates, bonds turned higher. The daily, oh, I know what I did. Okay. If you look at breadth, look at the drop. All right, so I've made a few mistakes here, so let me do some quick repair here. Never happens, right, Sherry?
No, never. Every single time I get the same thing. Oh, I hit the wrong button. Oh,
Cut.
let me make a few errors. Let me change it.
All right, I'm getting, my wife's mad at me. She wonders why I do these things on vacation. I explained to her that I do it to help me as much as help you, because it forces me to look at the market. So let's bring this up. If we look at the 20-day, stocks above the 20-day, there was a bit of a drop. How did I end up with the same thing again? All right, I'm going to pause this for 1 second and fix it. All right, I thought these were important enough to show you that I'm just going to boot it back in the primary. So if I look at the NYSE AD line, you could see how it's turned over. It's pulled the bullish ETFs with it, and bonds have bounced. If I look at stocks above the 200-day moving average, go back here in my base report, you can see there was a bit of a turn down. If I look at stocks above the 40, I don't remember ever seeing a drop like this. I guess I can look back and see some, but 1 week drops, that was pretty significant from getting overbought to neutral. But that big of a drop has got to be concerning. If I look at the 2121, which is the number of stocks at 13-week new high, new low, that also came off overbought very quickly down to the middle. So any overbought characteristics we had short term are gone. And now, is that going to be the end, or are we going to further weaken? On the daily and the weekly McClellan oscillator, they have rolled over on every piece of them, but I don't see any divergences or anything that I want to call out there. Kill that, go back into the PowerPoint. Sorry for the confusion there. A couple other things I'd like to look at. My buckets, 74% of the stocks are now below the midline of the Bollinger Band. That's a dramatic change from a week ago. Almost 14% of the stocks are below the lower band. So we're getting, but not at a point where you expect a reversal. There won't be any HINDY omens until you start to get new highs. So the NASDAQ and the NYSE, you can see there's no red in that last column where you'd expect to see it. Market tone, we had a very long period of bullish. We had some kahunas to the downside, and we've triggered some bearish red in some of the markets as well as a number of the sectors. The Scott Index, which I put together last week to look for something that's going to give evidence of the market rolling over, it pulled back. Now, if you think about it, this is where my arrowhead was when we picked it. It's come down a lot. It had a bounce on Friday, but it's still above all its moving averages. So I'll say it's pulled back orderly, unlike the Canaries and the coal mine that have dropped down to their 50. So they're at the lower end of the channel and clearly at support. Know your news and earnings. If you look at the Econo Day calendar, retail sales, CPI, durable good orders, but let's get down to the nitty gritty. We've got some industrial production, new home sales, jobless claims on Thursday. It's a fairly busy, it's not a horribly busy news week because we don't have the monthly unemployment, and I don't see a lot of Fed heads speaking. There are still a lot of earnings to come out. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings dates are scheduled. If you want, you can always pause this. You can go into Twitter and search for earnings, and this will pop up. There's some biggies here. For me, Ulta, I always look at playing that around earnings, so I'll have to take a look at that. Dollar General, Cloudera, big run up this year. Quite a few things this week. Pet IQ, Coupa Software, that's done interesting as well. So know your earnings and your news. So my thoughts, I finished well off the lows, but a weak week for most of the U.S. markets. It really feels like we're getting into a correction or setting up for correction. We've set an anniversary for one of the longest bull markets ever, but do the charts suggest it's time to run? Saw the largest change in 1 week for some of my breadth indicators, demonstrating that the weakness underneath the indices might be greater. And once again, I don't think it's a time to be all in. I will continue to lighten my exposure, raise cash, and I've put together a list of contra ETFs to consider. should the markets roll over. Now, very abbreviated walk through the markets. Start with my trade station and my market force and divergence. Let's just look at the NASDAQ futures. Now, the last bar, which will be positive, is related to, well, actually it's not showing here, so I don't have to worry about it. Here's the NASDAQ futures. This is on Thursday. It had a sell signal come in, and then on Friday, it sold off, finished with a hammer. You can see the daily bond goes going red, the weekly bond goes green. We're in a buy signal on weekly and a sell signal on monthly. When I pull this down, I can find that buy signal. I just don't want to do it today. So as I look at the NASDAQ futures, they've definitely turned weaker. We're in the center of the channel. We've got a red bar and a sell signal. It certainly could predict a little bit more weakness to come. If I look at the E-minis, almost identical to the NASDAQ, except the sell signal came in on Wednesday. If I look at the Dow futures, again, a very similar pattern, but they've been in a downtrend for over a week. So the markets clearly are weak right now, and you need to be careful. And the dollar, it's outside its upper envelope, but it's in a buy signal, and it's obviously gave back some on Friday, but been in a very strong area. We jump into Hgsi very quickly, not quickly enough, I'm sure, for my wife, who thank her because she's allowing me to do this even though we're on vacation. So I promised a rapid one. Let's go into the market analysis groups, major markets plus. Let's just take a look at where the markets are and where the strength appears to be. Because there's been some change here from where it was the last time I looked with you. So you could see bonds up at the top. We talked about that. Gold and silver rallied this week. And look at where some of our favorite indices down. That's the archive view. Let's go to the top-down view. And you'll see similar to the major indices are down there. Gold, silver up at the top with the bonds. So let's take a look at Hgsi, some of the major markets that we might otherwise look at. So this will be the S&P 500, and let's change the view to, all right. Definitely pulling back here on the cash markets, S&P 500 closing below the 200-day moving average on Friday, gap down, tried to make it back, but still closed down on the day. The daily bongo's gone red. The Dow Jones Industrial Average, somewhere in here. I know it's here somewhere. It's right in front of my face, obviously. Similar pattern, but still above the 200-day moving average. As I mentioned, I think the NASDAQ dropped below. As you can see, it closed below on Thursday and Friday. The weekly bongo, however, is still green. And then the Russell 2000 using the IWM as the marker also has dropped below. The weekly bongo being green, for the most part, until proven otherwise, and I'm going to watch very closely because this is going to give me an idea of when to get out of this market. Are we just in a sort of a trading range and we're going to head down to the lower and bounce? Are we going to break through and head to lower lows? I have to be concerned based upon the time of the year and what the market's going that is a risk. If I look at the dollar, I mentioned the dollar weakened on Friday, but the dollar has been strong. You can see a weekday on Friday. The VIX had been high and then has been working its way lower. No shocker, it bounced on Wednesday, Thursday, had a bearish candle on Friday. And then gold and silver with the weak dollar bounced a lot on Friday, but have come down quite a bit from the last time, from their prior rally. Silver, I'll look at that quickly, but looks about the same. And then gold miners, a little bit better, but still come down quite a bit. So looking at that, it's hard not to feel some weaknesses in this market, probably more than the major indices are showing us. If I looked out at my industry groups, this I thought was interesting, 174 groups, 2 day up, we've gone from in the 80s down to 14. If I look at 2 days down, and just a couple. So Most of the damage was done, I think, on Wednesday, so it's not showing here. If I look at 5 days down, that's not the one I want. I've got 82 groups. And if I look at stocks that are up with 5-day momentum, it's only 8. So this thing has turned to the downside quite a bit compared to where we were. Looking at the industry groups showing positive momentum, a lot of these are defensive, precious metals, utilities, home builders up with rates coming down, utilities, household products, tobacco. So power generation, more utilities. Perhaps there is a number of signals here showing us that the market is weakening and that we need to be careful. If I look at precious mining, we'll look at a couple of these. Typically in my top-down review, I'll go through 10 groups, but I don't have time today, and I consider this a bonus session for you and me, so I'm not going to push my luck. Sideways move on American Barrick Gold. There's been some interesting M&A activity in this space. Everything's green up here. Did have a mobile breakout. It did have a pocket pivot. But I look at this, it's still in chop. I don't know how I could say it's anything but chopping around here. Newmont Mining, similar. AEM, I did like this one better. Why? Because it bases, it pops. It bases, it pops. 2 kahunas last 3 days. My signal, proprietary to be defined signal, popped. Mobile breakout from a squeeze, and I think AEM made it to my buy list. So precious metals look good. Application software. These have been some stocks that have been really leading, but have pulled back. Let's take a look and see what we have. Electronic Arts, I'm not interested. It had a big move on Thursday and Friday, hence it's at the top of the list. Guidewire, sideways. Ramp, LiveRamp Holdings. Fundamentals don't look good. It does not make money, and it used to, so that's a negative. Trades enough shares. With all the broken things in the market, this thing looks phenomenal. Earnings are out. Twilio has been a leader. It's pulled back some. It's not broken. Bandwidth also looks great. Application software. Rosetta Stone, that must have been on earnings. Not interested in Activision. And LivePerson, another big move, pulled back. It looks like it wants to go higher. So application software looks interesting. Infrastructure software. I'm just going to look at one more group, and then we're going to go into some of the stocks that I liked and didn't like. Upland Software, a Bible gap up. This is a stock that's already been moving up, pulled back to support, had a Bible gap up, I believe, on earnings. Oracle, going sideways here. This is the kind I call pullback waiting for a signal. Similar to Proofpoint. That's the title. So I think the bottom line is, and I don't have time to really do it justice on a top-down approach, is there's not a lot of winning groups compared to the last couple of weeks. So we have evidence of the indexes turning down. We have less positive industry groups. The breadth is worse. The signals are pretty loud to me that this market is not as strong as it was a couple of weeks ago. Now, let's take a quick look at what I did like this week, because I did find some things that were potential buyable. So let's see if there's anything here that I'd like to show you. So if I look at industry groups, what comes out at me, I saw a bunch of REITs. We'll look at Fair Trust and WP Carey. They would probably benefit if the market's turning down. So here's a stock that ran up, was going sideways, and it's starting to move. It pays a 3.5% dividend. And WP Carey is another one that pays a nice dividend, 5.4%, pullback, and looks like it wants to go higher as well. This should bother you if you're wanting to be long. I'll come back to those in a second. Green Sky is a company I've never heard of before, but I got to admit, I like the chart. Pullback, but it's starting to move up. Even on Friday, it tried to get, it closed up on the day. Everything's green, plenty of shares. It's got earnings coming in. Base pen up here, it must be an IPO, and it's in that application software group that happens to be so strong. A lot of these stocks are pullbacks that you're looking for perhaps something to happen. Here is why had good earnings, looked like it was going, it pulled back, had a nice close on Friday, a positive day. Is this one going to be a short-term candidate for a bounce? Funko looks identical, another one, the similar pattern. Costco is probably the best chart pattern. Pullback, sideways, breakout above the moving averages. Mobile breakout from a squeeze, buyable gap up. My indicator turned positive, pocket pivot in Kahuna, and it's got earnings growing beyond its PE, so Costco looks interesting. And then, speaking of pullbacks, is this a time to start sniffing around something like Salesforce that's pulled down to the 50-day moving average and bounced? It's certainly something that I'll be watching as this week goes. Now for the concern I have. Let's look at the Qs. Now, here's the FAZ. So the FAZ, which is ultra shorts, direction 3x short financials, had a big run up, pulled down, and looks like it's running again. This is not good for the market. The Qs, are the Qs going to, this is the ultra short Qs. Similar pattern, looks like it's starting to get some momentum and running again. If I look at what I was interested in shorting, if I was a shorting person, high yield bonds, they have tracked the market. These have rolled over. Let's look at these. Adobe was pulled back. If it doesn't bounce here, then it's got some sky below it. Edwards Life Sciences, similar patterns coming down. I want to get to the S&P iShares. Has broken down. Is this a stock you rather buy or short? I'd rather be shorting it, especially if it breaks down below that 50. And the NASDAQ Qs, the long side, my sell signal came in on Wednesday. Pocket pivot, kahunas to the downside again. You might expect a bounce here at the 50, but a failure here on any of these is something that might lead to further fallback. So I'm going to stop it now because I promised the home guard that I would not go on too long, and there's really not much more to say. I think this market is risky. I think you need to be careful. I hope you have a great week or two. I'm not sure I'll do this next week, and maybe I'll share some more of my Vietnam pictures when I do. Take care, everybody, and safe trading, and have a great day. Bye.